Today we're diving into a topic that's the backbone of nonprofit work, the 501c3. If you've ever wondered how nonprofits get grants, build trust with donors, or even operate tax-free, it all comes back to having this crucial designation. This episode will cover: what is a 501c3? How do you set one up? And the importance of bylaws, conflict of interest policies, and ethical operations. By the end of this episode, you'll clearly understand how to lay the foundation for a strong and sustainable nonprofit. A 501c3 is a tax-exempt status granted by the IRS to organizations that operate for charitable, educational, religious, or scientific purposes. It's not just a fancy title, it's what allows nonprofits to avoid paying federal income taxes, receive tax-deductible donations, access grant opportunities, and other funding streams. This status is like the gold standard for nonprofits. Without it, many funding doors remain closed. Setting up a 501c3 takes some time and effort, but it's worth it. Here's the process in a nutshell. 1. Define your mission. What's the problem you're solving? Who are you serving? Your mission is the foundation of your nonprofit. 2. Incorporate as a nonprofit. File articles of incorporation with your state. This makes your organization official. 3. Get an EIN, Employer Identification Number. You'll need it for taxes, banking, and other official business. 4. Apply for tax-exempt status. Submit IRS Form 1020 or 1023-EZ. The 1023 form is detailed and better for larger organizations. The EZ form is faster for smaller nonprofits with budgets under $50,000. The cost of filing these forms ranges from $250 to $600. 5. Build a board of directors. Don't take this step lightly. We cannot tell you how important it is to assemble a competent board of directors. A sustainable nonprofit needs a board to provide oversight and guidance. Choose people that are passionate about your mission and bring valuable skills to the table. Basing your nonprofit solely on whether someone is a friend or family member is a recipe for conflict and many times can end to the detriment of your dream. Once approved, congratulations, you're officially a 501c3. Getting your 501c3 is just the beginning. Here's how to keep it in good standing. File annual reports. Submit IRS Form 990 every year. This shows how you're using funds and keeps your status active. Be transparent. Keep clear records of donations, spending, and program outcomes. Donors and funders love transparency. Stay mission focused. Funds must go toward your nonprofit's mission, not personal gain or unrelated projects. Failing to follow these rules can put your status at risk. Now, let's discuss the importance of contracts. Contracts are vital for nonprofits to ensure clarity, accountability, and legal protection in all relationships, whether with employees, board members, or external service providers. Here's why contracts matter. Contract 1. Clear expectations. Contracts outline duties, responsibilities, and deliverables for everyone involved. This prevents misunderstandings and keeps everyone on the same page. 2. Legal protection. A contract protects your nonprofit if there are disputes, ensuring that agreements are enforceable. 3. Transparency. Contracts help maintain trust and integrity by showing donors, funders, and stakeholders that your organization is run professionally. 4. When to use contracts. For paid roles, contracts should cover compensation, job duties, and terms of employment. While board members aren't typically paid, you can use a contract or agreement to define their responsibilities, conflict of interest guidelines, and term limits. Always have contracts for services like grant writing, event planning, or partnerships to avoid misunderstandings. Using contracts isn't about creating unnecessary paperwork. It's about protecting the mission and ensuring everyone works together effectively. But what if you are operating your nonprofit and for-profit under the same umbrella? It's common to see a nonprofit and a for-profit working toward the same mission under one umbrella, but there are key things to keep in mind. The nonprofit and for-profit can operate as similar businesses, but must have distinct and separate missions with their own bank accounts, tax filings, and decision um, making processes. Hmm. If both entities share a similar name, for example, Community Builders Nonprofit and Community Builders LLC, it's important to add slight differences to avoid confusion. When the nonprofit hires the for-profit for services, a clear fair market value contract is crucial. This avoids conflicts of interest and ensures the nonprofit's funds are used responsibly. Always document financial transactions between the entities and disclose them in annual reports. This keeps everything above board and avoids scrutiny from the IRS. It is not uncommon for a nonprofit and a for-profit to have mutual benefits. A nonprofit might focus on community programs, while the for-profit handles product sales or services that generate revenue. Together, they strengthen the mission while maintaining compliance. By keeping operations distinct, adding slight naming differences, and maintaining proper contracts, nonprofits and for-profits can work together without crossing legal or ethical boundaries. Operating a nonprofit or for-profit on the same property as your personal residence requires careful planning to protect your personal assets. Here's how to do it. Create legal separation. Ensure the nonprofit or for-profit is a distinct legal entity, such as a 501c3, LLC, or corporation. This separation protects your personal assets in case of legal or financial issues. Establish a lease agreement. Draft a formal lease agreement where the organization rents the business portion of the property from you as the owner. Clearly define the area being leased, for example, a detached garage or basement office, and include rental terms, even if nominal, such as $1 per year for the nonprofit. Maintain clear boundaries. Physically separate the residential and business areas with clear distinctions, such as separate entrances or signage. Ensure local zoning laws permit business or nonprofit operations on the property. Obtain proper insurance. Your personal homeowner's insurance may not cover activities related to a business or nonprofit. Ensure the organization has its own liability insurance to cover its operations. Consult a lawyer to draft lease agreements, liability waivers, and other necessary documents tailored to your specific situation. Consider tax implications. If leasing part of the property, you may be able to deduct associated expenses like maintenance or property taxes for the leased portion. Ensure the organization's use does not overlap with personal residential use, which could complicate tax reporting. Taking these steps protects your residential property while ensuring the nonprofit or for-profit office operates effectively and legally. The 501c3 isn't just a tax designation, it's the foundation of a nonprofit success. By setting up clear bylaws, adopting a strong conflict of interest policy, and handling board-related roles with care, you can create a nonprofit that's ethical, transparent, and effective. Thank you for joining this discussion on 501c3s and its importance to nonprofit businesses. Next time, we'll continue exploring ways to build stronger communities through impactful work. Until then, keep dreaming big and making a difference. If this discussion hosted by the Hidden Voices podcast was helpful, please remember to like, share, and subscribe.